Friday, the 19th of August, 2011, and let's try to make sense within this gold chart. It's the daily chart, and there are many things I like to go over. First thing is trend line analyses. The original trend line that connected the range within July was something in this nature here. Well, we find support at previous resistance within an upward trend. That means every day you'd have to go up a certain percentage just to maintain the trend. And what I often like to do is sometimes draw lines of the exact same rate of ascent and the exact same direction within top to bottom. Okay, so it was a little bit of resistance in here, but really not much, and it's gotten above that level. Did it manage to happen to get to the second one by chance? Because that's what happens when one area that's supposed to be resistance isn't. You go to the next one that's on the target level. Okay, so that one did work out to resistance. Okay, will we find support here or here? Either way, that's bullish. Okay, there's a lot of other things to go over in here as well. The next one is that of the 18 period average. Before we had support, and yeah, support here. Then it lifted off from it in here. We haven't seen it since. The 18 period average of closes is 1750. And these are going higher. So 1780 will be approaching on the highs. We're a decent a ways from that area, around a couple of percent. Now, what else can we see about this chart? And what we can see is that we came up to this band. This is not a Bollinger Band, but it is designed for the same sort of reasons. It is harder to hit, and it's almost impossible to stay above it or stay below either one of the lines. The only chart that I have seen that has managed to do it is the inflation over the last so many decades, which is a big reason, of course, why gold is going higher. It's not really gold gaining value, but more along the line of the dollar losing its value. Now, back to trend line analysis. Whenever you break a trend line to the upside, you can do the same thing I did before about drawing higher resistance lines, but ultimately what you do is you create higher resistance levels, and there's that can continue on. You can go from this to maybe this, and that keeps on going as you break resistance levels in parabolic moves. It's good to talk about this now because it's unlikely that it will happen here. But it's likely, in my opinion, that with the fundamentals within the current macroeconomics, that it's got a very good chance of happening within the next so many weeks, months, and even a handful of years. Therefore, it's good to know if you can find when this situation's coming into play. I said back in here, maybe even into March and February, that it's really going to take the gold market to get to $2,000 an ounce for people to really start to say, hey, wait a second, why is gold so much? But really find out decent reasons, if not the correct reasons, to why this would be the case. As well, there is some Fibonacci levels that if can't remember offhand if it was the 1420 level. I think it was around 1420, somewhere in that area. If this level was not resistance, the next objective was to 2000. Therefore, it really looks as if this is going to move towards 2000. My best guesstimate is that it would have some sort of blow off top at that area, but at the same point, you do have to watch out for these levels when they become resistance to not be that, because that's when parabolic happens, when they basically throw curveball in the market. When everybody sees that 2000 is a psychological number and different reasons on whatever fundamentals or technical numbers they use as says 2000 that it's just going to be a top. Well, when that doesn't occur, if of course that doesn't occur, which is favored that it will retrace, but in the odd times that it doesn't, that's when explosion moves come into play. You're not going to get your standard moves that would be the same, like go from 1500 to 1600 or 1700. That's about 12%. You're not going to gain only 200 or 250, rather 800, 900, even $1,000 gains when you break those status kind of levels. 1,000 was the last big psychological number. The next one is 2,000, and it had to double to go from 1,000 to 2,000. And it's interesting because the original bottom of gold is 250. Well, not the original bottom, but from the bear market 1980s top. So it had to double to 500, and at 500, people would be saying, well, it looks like maybe it might be getting going. It looks okay. And at 1,000, which brings us to 2008, people are like, oh man, gold's the next big thing. We got new all time highs. And well, it sunk to 700. And now to double that, we have to go to 2,000. Therefore, it has only been about, let me try to do the math quick in my head, a little less than 3.5 years since gold first touched 1,000. And if you look at the percentage gains that we have within this chart itself, we got currently it's up 1% today. Yesterday it was up 1.97%. Over 20 days it's up 15, and 100 it's up 30. These are normally large gains for gold over the last 20, 25 years, and therefore it's showing higher volatility signs. But I was stating before that gold has not been overly volatile, but showing signs to get more volatile. Therefore, that's giving us indications that these large days could possibly be upon us. But realistically, it's not, but it's good to stay alert that you don't know how long it's going to take for things to really get into the explosive cycles. And I was watching Realist News, and it was very interesting. He was reporting that within the Webbot predictions, and these are predictions that just make a lot of logical sense, that there's going to be like the big money. We're not talking your everyday millionaire. No, no, we're talking your everyday billionaire. And they come in and they're like, okay, I want my gold, and it's like, yeah, you know what? There's a little problem with that. It's kind of been misplaced. And when people want their physical gold that has been told to them, this is our trust agency, we got the insurance for it here, it's fully protected this way. Hey, you got these premiums to pay, but it's worth it for protection. And in reality, they would be worth it as long as they actually protect what has been held. And that has not been the case because nobody knows what's in Fort Knox, with the rare exception of the few people that do. And they probably know there ain't much in there because they're the few people that actually get to see it. So what's going to happen when they all want their money and they are like, okay, wait a second here. I had so many tons of gold, or so many uh, kilos of gold anyway, and I want to get paid now, and they're not going to be able to do it. That will be an interesting situation. Now the question is, what's the odds of something in that nature to occur? Well, um, I'm just going to leave it at that. I'm going to quickly now put on a more longer term gold chart. And here we go. We have a breakout up to this Bollinger, not a Bollinger Band, but my band, which it states it's currently at 1883.51, which is pretty close to our intraday high so far. And let's just do these trend line things that I don't know if they make any sense or not. I'm sure they may, but according to this, whether I put the resistance here or here, it really doesn't matter. It's a breakout. maybe I can see where these two peaks reach at. And well, this one hasn't hit as of yet, but what's interesting when we look at this on a monthly perspective, this is the first time since in here the market has really broken free from this 18 period average, which was the top area of $1,000 an ounce. Maybe we're doing the exact same thing again because people have been stating, well, hey, silver, gold are going up and the stock's going down. That didn't happen last time, and yes, it did happen last time because the stocks topped in the fall of '07 and the metals topped in the spring of '08. So there were different time frames in which it occurred. But if you look at the mathematics within it, okay, let's assume we continue rallying some more. Say silver goes back up to say 50 and gold to 2000. And then everything just collapses like it did before. Then where would we see the Dow? Whatever low numbers it's at, it's pretty bad. But the last time gold was here, it was 700. Silver was 8.5. Okay, so maybe gold goes to 1400. Maybe silver goes back to 30 or 25. And well, it's higher than the last break area. And when silver went from 8 up, it went up very fast, as did gold here because it was at really depressed shorter term levels. And gold going to 1400, silver going to 25 would be that case, and a bottom within that area would create large gains. But again, we are seeing signs of potential breakout patterns. These are when the charts can go off the walls, and when that's the case, it's volatility to both directions. Now, as far as the percentage moves are occurring, currently for the month, gold's up 13.8%. The last month it was up 8. Over 20 days, it's up 69% almost, and close to 450% over a 100-day period. This Fibonacci is an interesting one because two things are happening within its automated level. One, the 100-day low is increasing. It says 338. That's because 250 has been taken off its screen, and I now see the dates here. I didn't change it to put in years, but within there's 83 periods here, so 12 times 5 is 60. We're looking back at about 6-7 years. That's the time frame. But within 100 periods, which is where this number comes from, it's breaking away from 250. And at the same point, this high is making new highs every single day, it seems, or at least every few days, every few weeks, almost every month, it's making a new high. You're not going to really need to know these levels until there's any sign of a retracement, and there's no sign whatsoever on this chart for that to be the case. The strength meter is at 99.1%. The previous one was around 93%. And what's interesting is it's had the exact same correction. It's went from 1880 and it's went down a couple of percentage points. Okay. So this one, it's barely went down at all. It's in I'm ready to go formation. Anyway, thank you for tuning in and have yourself a magnificent day. Bye bye.